What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 21st of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about the recent shifts we've seen in Bitcoin dominance. As Bitcoin has continued to rally, we've seen altcoins come out even stronger, starting to gain market dominance and point to the fact that we might be getting an altcoin cycle over the coming months. Now, we're going to be talking about a few reasons for this, looking at a few different data points, and just getting an idea of what I'm looking for in this altcoin cycle. Outside of that as well, we've also got a sponsored interview with Guy, who runs the EUS operations for eToro towards the end. It's a sponsored interview, so definitely stay tuned for that. You won't want to miss it. All right. So let's go ahead and take a look here over the last 24 hours. We can see the vast majority of cryptocurrencies are up. Again, we're starting to see an uptick in markets, regaining some of the cutback we've seen over the last few days. And a lot of cryptocurrencies are outpacing Bitcoin here. We've obviously got the funny money BSV rally. We've also got Dash and Energy, interestingly enough, in tandem here, very similar projects. Synthetics, a DeFi project, doing very well at 9%. Ethereum Classic up 9%. Icon 8.3%. And then also some of our other top 10 picks for the year, like Steem. We've also, I think, saw Basic Attention Token and then also Chainlink doing quite well, all above 4 or 5%. So if we take a look here at global market cap, since the quote-unquote bottom here, I know some people again would believe that we might be coming back down. I really don't see that coming. Again, I don't see Bitcoin at 6,000 or 5,000 anytime soon. I think we've had a very clear double bottom here at a bottom of around 175 billion. We're now tailoring up towards around 240 billion. So we've gone up about 45. Excuse me, my apologies on the mixed math there. So we've gone up a few tens of billions of dollars here, going down from a low down here at 175 billion. And again, at the peak here, around 250 billion, right? So this is about a $75 billion change in market capitalization from down at these levels at 250. So I think we're easily getting back up there. We're setting a higher low here, which is good. And we're going to continue higher from this point on. Now, that's not just the only thing we have to look at here. Obviously, the cryptocurrency market has been tailoring up, and many people will be quite confident that we're going to continue to tailor up as we go towards the halving event in May. But I don't want to just focus in on Bitcoin or general market capitalization. I want to take a look at where the shifts in that market cap are going. Are we seeing more growth in Bitcoin or altcoins? Are we seeing that growth in altcoins, if there is any, in specific players? That's the key thing we want to focus on. And I will say, to just put it in summary, guys, that right now I'm obviously bullish on altcoins. I have been so for the last few months ever since we've seen a trend shift on the weekly. And along with that as well, I'm positioned in a lot of the plays that have really been gaining a lot of the momentum here, that have been taking on this market dominance that we're going to talk about. All right, just want to put it simple there, but I hope you guys stay tuned for it, because we're going to look on multiple time frames here, how we're really starting to signal a shift in altcoins here. Now, if we take a look here on the monthly here, I want to focus on a few things. I mean, we're looking at the broadest time frame here. We're taking a look at Bitcoin dominance. So as the chart declines here, this means altcoins are gaining dominance. It doesn't mean Bitcoin is going down in value. It just means altcoins are outpacing Bitcoin. So we can see here, we had a massive decline here of Bitcoin dominance back here in 2017, and when we had the previous cycle. And if we take a look here in the monthly, right? There's our three indicators here. We have the squeeze momentum indicator, which is declining. It's been doing so for 2 months. We've also had the MACD declining its divergence for 5 months in a row, looking like it might be crossing here in the next maybe 3 or 4 months. Outside of that as well, we've also got the stochastic RSI, both lines pushing towards the purple channel. When both of these hit the purple channel, we're going to be seeing this as a bearish indicator. And interestingly enough as well, towards the decline back here, we also came down back into this channel when we really started to enter in towards this downtrend. All right. So the monthly time frame looks bearish for Bitcoin dominance, meaning altcoins are gaining power here. If we take a look at the weekly as well, we can see here MACD divergence declining further. We didn't get the cross to the upside. Divergence or decline here on the squeeze momentum indicator, starting to reverse here and continuing to grow on that decline. And also a fake out like we got back here in December of 2018 on the stochastic RSI, going back into bearish territory. Now, you might not even have to look at the indicators. You can see that generally speaking, we've been topping out around this range for over almost half a year now, similar to a range that we saw back here. And I think this was back in the first part, or the second quarter of 2017. If we take a look at the indicators, again, same thing here, but also on the daily time frame, it becomes very clear what's happening here. We've been setting, generally speaking, either similar highs here or lower highs. It's shown that there's continuous resistance here around the 70-point range, and now What we're getting here, if you take a look at the hourly, I don't know why it's taking a second to load, guys. Sorry. The charts are not working as fast today. You can see here that we started to set multiple lower highs here, really started to kind of wedge in on price, and now we're pushing towards a very severe level here. Anything below 67 points is really screaming some weakness signs here for Bitcoin dominance, and signals that altcoins are getting strength here, that buyers are taking on more risk. In this environment where there's a little more beta, we're getting a little more volatility, we're starting to see more people taking on riskier positions within altcoins, right? And again, this isn't some kind of crazy speculative period. I mean, there's a lot of things to look forward to in the altcoin market, guys. First off is Ethereum. Ethereum right now is relatively cheap. Even if you take a look at the logarithmic chart, we're holding on a long-term line of support with the previous significant low back here as well, with one of the midway lows until we continued on for the cycle for Ethereum as it started to really break out. This is a very common level, and not only technically speaking are we in a very significant period on the USD chart where this looks like it could very well break out and continue on towards previous highs and hopefully beyond as we go into the next cycle, but Ethereum's got a lot of fundamentals. It's got the DeFi movement. It's actually started to find its marketplace, and it started to build a lot of value not only for ETH as a as a token, but also just in the sense of what kind of possibilities the Ethereum network could provide for economic benefits or for financial use cases. Outside of that as well, we've also got plays like Chainlink, which have been continuously setting higher lows here in the significant long-term trend against Bitcoin. It looks like it's ready to break out of what looks like to be an ascending triangle on a very long-term time frame since back here in May of 2019. This could lead to a big breakout, in my opinion. This is why it's one of my top plays for the year. Not to mention it's fixing a very big issue, which is the Oracle problem, all right? So we've got things like this as well. We've got Basic Attention Token, which is continuously getting new users on their browser. Generally, again, setting a higher significant set of lows here. Again, it's exactly what we want to see here. And they're having, if you really look at it, it might not look like much, guys, but these are significant gains in Bitcoin dominance, right? In many cases, going up 50, 80, 100% from the previous lows, some going up even further than that. And this is the kind of stuff we want to see. Now, what we're looking for next is to really see some of the momentum plays like XRP or Stellar Lumens, or some of the other crypto plays that we've seen in the past that do really, really well during altcoin cycles to pick up. But they might not come around this time. Maybe they had their cycle before. Maybe it's going to be new names like Chainlink, like Basic Attention Token, as we talked about, and also one of our other plays, Kyber Network, which has been, again, setting higher lows here over time, starting to even break away from the support line upwards, showcasing that buyers are not waiting for these time periods. They're buying in at higher levels. These are all the kind of signs you want to look for. And I want to stress this key point here, guys, as we talk about this kind of altcoin cycle. A few things. First off, if you haven't already, check out our top 10 coins to watch in 2020 video. Highly recommend it. It summarizes, it's about 40 minutes, but it summarizes very much where I'm positioned in the altcoin market, some of the plays that I like for this year. But along with that, it's important to understand that just because the altcoin you guys are holding is not going up does not mean that we don't have an altcoin cycle. I want to be very blunt and clear with you guys, because I know some people are very soft and they want to say that everything's going up and they don't want to tell you the truth. Guys, to be fair, at the end of the day, there are going to be a lot of altcoins from 2017 that are going to fail, they're going to flounder, and they're never going to come back. I've said this many times on the channel, and it's so true. But so many people can't face it because people get emotionally attached to an investment, right? So my point here is this: follow where the momentum is, right? The ones that look expensive right now are likely the ones that are going to be cheap in the grander scheme of things, because if there's momentum in it, there's obviously some sense of fundamentals, especially with the plays that we're seeing now. I can tell you that from the ones that are really leading the market, there's actual fundamental development this time around, because we're not going to get the rampant speculation we saw last time. We are, however, going to get some form of speculation as the market grows. More people get involved. Again, valuations will eventually get a little bit overinflated, but as traders, we should take upon those opportunities. We're here early, we're doing our research, we know the fundamentals, so why not take advantage of that as an investor or trader, right? So that's the general kind of gist here. We want to focus here on where there's cheap opportunities, where risk-taking still has room to flourish, right? So again, I recommend you watch this video. And again, follow a lot of other people, guys, on Twitter and YouTube. Don't just follow me. There's a lot of other traders who are focusing in on this. This is a really interesting chart as well. We'll take a look at altcoin market cap in just a moment. But this black line here, this kind of brownish dark line here, is indicating market cap for altcoins compared to the Bitcoin market cap. And interestingly enough, we can see here that we had these two periods where we had a divergence. We had higher lows here for altcoin dominance, and we also had two declines here tackling towards the bottom of the 30-point range for the weekly RSI. And it looks like we very much might be getting something similar over here, right? Setting our low here and then looking for that second significant higher low, right? We might see this again. Who knows? This was back in December of 2019. We might be very much on our way to setting that second higher low and then moving higher. We also may not get a second higher low in this case where we basically stay there for a while like we did last time. It might, kick off very quickly. And then along with that as well, we've also got, again, very clearly here, higher lows. And then also it looks like we're starting to build up momentum with some volume. Now, bear in mind, a lot of this volume is not real, guys. Doesn't mean that the price action isn't real across the board. A lot of the altcoins, what I'm actually liking to see now is a lot of the altcoins that I'm optimistic about are actually getting a lot of major liquidity from some of the U.S. open exchanges, like, for example, Coinbase, Kraken, Bitstamp, ones that actually have real liquidity on them, and we don't have to worry about wash trading and things of that sort. And the last thing here is just putting this on a longer term perspective, right? The higher lows here, we saw that in the previous cycle here before we really took off. I mean, guys, it's history repeating itself, at least in my eyes. I don't know if you guys see it different. If you do, leave a comment down below whether you agree or disagree with me, guys. And I want to hear from your thoughts on this. But again, looking at the Bitcoin comparative pairs on some of my plays, I'm continuing to outpace Bitcoin. I've been growing my Bitcoin size portfolio, if you want to view it that way. I also like to hold some of these projects because I think it's really going to get to the point where you don't just want to hold Bitcoin. You want to have a sense of diversity. Again, though, you got to determine it for yourself, guys. I can't give you financial advice, but I'll say, look, on the indicators here, everything is flashing good. The weekly here on altcoin market cap looks good. We have a cross on the MACD. The stochastic RSI looks good. This is exactly what we're looking for, guys, for that next cycle. It doesn't look crazy right now, but that's because we're going through the sideways portion here until we really kick off into the exponential cycle where altcoins really start to gain market capitalization and hopefully market dominance. All right, so that's going to be it for the video, guys. Thank you all so much for watching, and let's go ahead and dive into this awesome interview with Guy, who operates the major operations for eToro in the United States. Alrighty, everyone. So for today's sponsored interview, we are sitting down with Guy Hirsch, who is the managing director of U.S. operations for eToro. Guy, thank you very much for making the time to talk. I know you guys have been growing like crazy here in the U.S. as you've been kind of going on this global expansion to bring financial services across the world. So thank you for making the time. It's always appreciated.
For sure. Thank you for having me.
So I have a lot of different questions I want to talk about in the sense of eToro, but just before we get into the kind of more complex things about, what you guys do, what are some ambitions at eToro expanding into the US? What is eToro? I think some people are aware of the platform because we've talked about you on the channel here before, but for those who may not know, what is eToro all about?
So eToro is a global investment platform. It was started in 2007 and offered retail investors the opportunity to create an account, deposit funds, and then have access to the global markets in a simple and transparent way. And so ever since 2007, we've been growing very nicely, both in terms of offering and scale. So today we're live in more than 140 countries. We're a multi-asset platform outside of the US. So you get to invest in US stocks, indices, commodities, currencies, and cryptocurrencies all on the same platform. And basically, as you start trading, your trades, your track record, your portfolio are all shared with the rest of the community. So people can see how well you're doing with your own real money, which is kind of unique to eToro. And then we build this kind of social layer on top of the experience, so people can post about their trading ideas or their trading strategies, and other members can like, share, comment, do all the things that you would expect from a social feed. Lastly, I'll just mention that a few years ago, we've introduced something called Copy Trader. So we took it to the next level, that social interaction, and we allowed people to invest in one another. So if you see someone who's doing really well with their own money, you can decide to copy them. And then what would happen, it's as easy as buying Bitcoin. You would open a trade on that person, all their portfolio holdings will be open in yours on a proportional basis. And then from that point onward, every time they will trade, you will trade at the same time, same price. And that's really one of our core differentiators in the marketplace. So that's eToro. A little bit in terms of numbers. Last year, the notional trading volume was $1 trillion, 12 million registered members, 800 employees. We have offices worldwide in London, London, Hong Kong, Australia. Headquarters is in Israel, and then we have a global operations center in Cyprus, and now here in the US, we also have an office, and we've launched eToro US in March of last year.
Yeah, no, I've been fortunate enough to get to know a lot of you guys from the team. And as you were mentioning, Guy, it's not just a social platform, the ability where you can communicate with other traders, maybe like platforms like StockTwits or Twitter. But along with that as well, you have the ability to actually go deeper in connections with other traders. You're able to use the copy trade and copy portfolio feature. Now, I want to spend some time in a moment to talk about the difference between those two. But I think it's so awesome to have the ability of having not only a transparent way where eToro can say, look, these are the real-time positions of this individual. Here's their track record. But giving you also the functionality now in the US where you're able to actually copy cryptocurrency trades for people like myself, for all kinds of different participants in the cryptocurrency space. I mean, how long did it take you guys to get to the point where you could do that?
I think it's been years in the making. So it's pretty difficult. It's a very complicated system to allow people to do that. But once we've introduced that a few years ago, we've built kind of core competency around it. And not only that, we took it to the next level by introducing something called the Popular Investor Program. So as people started copying one another, some of them became very popular, meaning they grew in terms of how what we called assets under copy were copying that particular person. And so we've established this program where we're actually paying those who are becoming popular on the program. We're paying 2% of the total asset that are copying them. And we have a lot of people that are making a very good living just by managing their own money on eToro. So we think it's democratizing access to great portfolio managers. It gives those who are really good at it all the tools and services that they need to get the distribution, to get their name out there. And I think it's just a win-win for everyone.
Yeah, it's an interesting system where you can make it where someone, even like myself, or just kind of like an average everyday content producer, trader, can go out there and basically almost act like a manager, a fund manager in a sense, and be able to direct the market in this case, and not having to go through the traditional hierarchy of major banks and hedge funds, and just kind of letting people do it on an independent basis where they're living in their own world, doing their own investments. And going on that point, Guy, I think what would be really interesting to talk about here is the difference between copy trader and copy portfolio, because obviously a lot of people have come to my channel, I think, over the last year, 2 years for more of my trading, but also as well, there's a lot of people, including myself, who've actually started to do a little bit more of a long-term investment strategy, focusing more on building on a long-term portfolio. So what's the difference between these two, and why might one be valuable for another individual?
That's a great question. So one of the primary differences, or the key differences between copy trader and copy portfolio, is that copy trader is copying a person. So there's a person that has a portfolio at eToro, and they trade whenever they want at their leisure. It's their own money, and so they can trade, daily, hourly, whatever however they feel like. So as long as their portfolio is not too risky, and we have a risk score between 0 to 10 based on the volatility of their trading pattern. So as long as it's not too risky, other people can copy them. So they can change the strategy, they can change their trading behavior. That's copy trader. Copy portfolio is much more like an actively managed mutual fund. There's a strategy, there's a defined strategy. Let's say exposure to tech stocks, or exposure to cannabis-related stocks, or things of that nature. In crypto, it might be based on sentiment analysis. So we have this copy portfolio that we've launched with a company called The Tide that analyzes sentiment on Twitter, and based on that, trade. So it's much more of a structured product. When you opt into that, you opt into a particular strategy that won't change. That's a strategy you're opting into. And there is a company behind it. It's either eToro, meaning our own analyst and capabilities, or it's a partner copy portfolio of another company, like in the case of the TIE, where they devise a strategy and it rebalances on certain intervals that we disclose to our customers. So let's say once a month or once a quarter. So it's a much more structured product, copy portfolio that is, versus copy trader that is a person that isn't obligated to stick to any particular strategy, any particular allocation, or any particular asset class. They can do whatever they want. It's their money, and that. So these are the differences between the two products.
So
Sure.
in the case of copy trading versus copy portfolio, to put it simple, a copy trader gets much more kind of liquid exposure to various different markets. Their positions can change much more frequent. And in this case as well, copy portfolio is something that just kind of well positions you in a well-defined portfolio that probably tackles certain markets and that you can see all the transparency from right from the get-go.
Yeah. So you basically, when you opt into a copy trader, you bet on someone's personal capabilities to trade an asset class or multiple asset classes effectively based on their track record, their real track record with their money. But you know that they might change their pattern. You know that they might get into a new asset class, or they might change the way that they're thinking about how they trade. And with a copy portfolio, let's say when you opt into a strategy that is giving you exposure to tech stocks, right? You know you're going to be in tech stocks. It's not suddenly going to be in precious metals or in something else. It's going to be investing in tech stocks, and that's what you're opting into. So that's kind of the difference. But to your point, you made a point earlier about thinking more long term, and I think that's something that needs to happen in crypto too. So as opposed to getting in and out and from different positions in assets, I think we as an industry will be more wise to say to those who are not yet in crypto that they should diversify their portfolio and just allocate 1% or 2% of their net worth into alternative asset classes. And oh, by the way, crypto is a great alternative asset class. It's not correlated to stocks, not correlated to bonds. It's been the best performing asset class over the past 10 years. So you should allocate 1 or 2% into crypto and just sit on it for years and years. And that's kind of part of your portfolio allocation and investment strategy to your retirement or kind of more long term. And I think with that message, we might have a chance to get in more and more people into owning crypto versus coming to this kind of wild west of day trading crypto.
Yeah, I think one point to build on the differences there, guys, you mentioned earlier, was that there's the risk profile measurement on the copy trader, and that can adjust very quickly depending on the trader's activity. So unless you're keeping on top of that, you might end up holding a more risky position. Whereas with, like you said, a portfolio, it's finite, which I think is so important for long-term investors, especially that bracket, as you mentioned, who are getting 1 to 3% exposure to new emerging asset classes and just want to get an easy vehicle for that to invest. But building on this kind of topic of copy trading and copy portfolios, and also those who might just be using the platform to socialize, what have you guys found so far in the sense of kind of the use or the utility on the platform? Like, how many of the users in this case are just simply communicating and trading on eToro? Are the majority of users using the copy trading or copy portfolio feature that you guys offer?
So I think by and large, most of our customers, I'm talking also outside of the US, they're buying and selling on their own. So they're making what's called in the US self-directed investments or decision. But we have a growing number of customers ever since we've launched Copy Trader that are either coming for that, and that's their primary mode of investing and trading. They're looking for other people who are just doing it better than themselves and investing in them. And maybe they, buy and sell some stocks or crypto on their own, but the primary vehicle into the market on eToro is through the copy feature. Or we see those who came in to trade on their own who are deciding to get into copy and get maybe a little bit more of the benefits involving in that. Outside of the US, we've seen tremendous growth over the past few years in people opting into copy. We have been growing very nicely in that direction, both in terms of assets under copy, a number of people who are copying, number of copiers, meaning number of people who are being copied. So all the metrics, by and large, are just growing. and we hope to bring that to the US. We're already seeing some people who are getting copied here, and it's only going to grow because it's just a good program. I mean, for those who don't want to, make the decision or keep on top of what's happening in the market on a daily basis, on a weekly basis, this is just a great way for them to get into the market.
Absolutely. I think it's such a great model that you guys are offering eToro, because the issue I've seen is I know the kind of statistics. A lot of people, when they trade independently, are usually not going to be able to yield a good profit in the long term. And having something where I can go out and copy someone who I rely on or I trust in the market, and I can also not only just trust them, I can see their performance. I think that's so valuable. Or copying portfolios in this case, where I can at least have a framework to diversify some exposure of my net worth personally. One thing I wanted to ask you guys, you guys have obviously talked about expanding into the U.S. This obviously isn't the first country really where eToro is focused. You guys have been a global company for some time. I got to ask you personally, what's it been like working at eToro? What led you to the position you're at eToro? What got you interested in finance and kind of led you to where you are today?
So I had the good fortune to know Yoni, the founder and CEO of eToro, for 12 years now. 12 years ago, I started a company that was very similar to eToro. And that's how we got connected. He was launching in Europe. I was launching my startup in the US. So back then, we're talking 2007 or so, you have a lot of social investing startups in Silicon Valley, companies like Kaching, who then later morphed into Wealthfront. And you have companies like Covester, then got acquired by a bank, and there were a number of VCs interested in this kind of I would say thesis, and so I was one of them. But then when the market crashed, I pivoted away into enterprise software and built my company that way. Yoni became very, very successful in Europe, and we just kept in touch throughout the years. And then my endeavors led me to a few roles at Samsung. And when I left Samsung, I wanted to be in crypto kind of full time. And just a tidbit on that. So I developed and implemented Samsung's first point of sale system. You're talking 2013. And one of the things that I wanted to do was to incorporate Bitcoin as a form of payment into the point of sale. I failed miserably in that, but was fascinated by the prospects of crypto ever since kind of 2012. My interest kind of grew and grew throughout the years. And then when it was time to leave Samsung, one of the people I got to talk to was Yoni. And he talked about launching eToro in the US, and asked me if I can lead that launch, and happily I kind of took that role, and it's been just amazing. I think one of the key reasons I took the job was I saw that our management team have been around. I mean, most of them have been around for like a decade or so. Mm-hmm. And that to me signaled a few things. I mean, there's no shortage of great startups in Israel. So people have options. But if they stayed for 10 years with eToro, it means that the vision kept being exciting, the company kept growing, but most importantly, that the culture was healthy, that there was no toxicity at the CEO or founders level. And after I've been with eToro for 2 years now, I can vouch that is indeed the case.
I can tell you, I 100% agree with you, guy. Tel Aviv has a ton of awesome startup potential. There's a lot of great companies there. But speaking of your story, man, I think it's a really exciting one because, as you mentioned, you had not only been creating a company very similar to eToro back, more than a decade ago. And I think that not only speaks to it, but along with that as well, that ability to see the power of Bitcoin as early as, did you say it was 2013?
Yep.
That's amazing. I mean, and also, honestly, I got to say, I think Samsung missed a good opportunity on that one, but that's good you had that kind of, foresight to see that into the future and stuff, and the benefit of Bitcoin and other cryptocurrencies for digital payments. Another thing I want to ask you guys personally, because you are heading up the operations for eToro in the United States, I think it's a very interesting person to gain perspective from, in the sense of asking, what do you expect to come in 2020? We just stepped into the new decade. What are you excited about? What things are you interested in at the moment, and where do you think crypto's going?
So I think maybe we'll start with regulations. I think on the regulatory side, I have been constantly optimistic about the US landscape, even though a lot of people are obviously, and maybe with some justification, are saying that it's a very cumbersome, difficult framework that we have here. If you're dealing with crypto and you're trying to do all sorts of interesting plays with crypto. However, it is the most important market. It is the world's kind of financial services kind of capital, and this is where capital markets happen to a large extent. And so I think the regulators are careful. However, I think they are trying. The SEC, the CFTC, at the state level, they're all trying to move in the right direction. So I think we would see more either leniency or clarity on all sorts of issues that are making our lives a bit more difficult. So I maintain a positive position that these regulators will change the rules to accommodate for more innovation to happen in this space. On the technology side, I think we see a lot of really interesting projects out there that are still trying to solve some core problems. But I think on top of everything, I think the industry still needs to grow in terms of usability and use cases. We still have a long way to go to communicate to people why should they own Bitcoin, why should they own maybe other crypto assets, what can they, what's the use case, what should they do with it. We aren't there yet in terms of getting people over the hump that this is not a scam, that this is not, I'm talking about the average Joe
Right.
Out there. We as an industry still have a long way to go in terms of education, but also usability, making it usable for people so that it will just be easier for them to own crypto and use crypto. That, I think, is still the main hurdle. And in 2020, I feel that we're going to see a lot of maybe movement on that front. I think there are a lot of startups, either on kind of loyalty points or cashback or crypto loans or interest on crypto that are improving slowly and surely. And I think at some point, more and more people would realize that, yeah, they can, they should own some crypto in order to leverage all of these benefits.
Yeah, to build on the two real points that you made there on this topic of regulation, I completely agree with you. I think we've always focused so heavily on some of the areas that are way too prone to accept anything in the crypto and blockchain space. And when I look at regions like Malta and a lot of the places that I've visited that are those countries people usually describe as very pro-blockchain, sometimes when you let anything go, there's a lot of noise and a lot of projects that raise way too much than what they can really produce for. And I think in the United States, as you mentioned, the CFTC, the SEC, most of the regulatory bodies, they really are trying. They are usually a little bit slow when it comes to technology, but at the same time, they're trying to keep up and they're trying to provide a fair market for it. And so far, I think the SEC has been a shining example of what it is to run an organization properly. They've been running a very good regulatory framework on, getting rid of the ICOs that were blatant scams back in 2017 and 2018. And they've let a lot of this space flourish. They've let Ethereum and the DeFi ecosystem continue. So I think on the regulatory front, you're right. And in the sense of some of the things to look forward to about making crypto easier to use, but most importantly, proving utility and functionality, I think the lending pools were the absolute champion this year, like what we saw with Celsius Network and a lot of other kind of protocols where you could lend out your crypto capital and earn 50 to 100 times the interest rate of what you get in your bank. That to me is something where it just sticks with the average user. And it's the same kind of thing I think what you guys offer with all fairness in the sense of copy trading. It's a clear utility in a market where I'm going to struggle as a newcomer stepping in and trying to trade for myself, or maybe even investing through copy portfolio. I may not know how to get a broad exposure to certain markets, but I think you guys really offer that. And I'm excited to see, after all these years, I used to trade equity markets, so I knew about eToro for nearly a decade, so I'm really excited to see you guys coming in to the United States and starting off, tackling crypto markets. I think this is a very exciting space and there's a big market for it. So I'm excited to see where you guys go, Guy. I appreciate you making the time, and thank you so much for coming on the channel. It means a lot.
For sure. Again, thank you for having me. It's been a pleasure.